Okay, so today is Monday the 29th, and if I was to include today, we have 3 days before it's all over, huh? 29, 30, 31st, and 25. 2025 would be history. So we are on track though. We are on track to complete our topics right on the expiration of 2025. Today I'm marrying two small topics, very brief. So we're putting them together today just to sensitize you to the main stuff. And what has to do with what we call it SALT, but basically what's talked about is the state and local tax deduction. Because remember now that when you prepare your tax returns, you have a personal section that calculates your state and local tax deductions. Okay, you recall that a while back it was set at a maximum of $10,000, because what used to happen is that individuals who used to have high tax rates based on the state also in which they live would have some significant deduction, but it was limited to 10,000. Now, hippie hooray, it has now been moved from the 10,000 to 40,000, from 10,000 to 40,000. But once again, this is not indefinite. It's not indefinite. So the 10,000 to 40,000 is just for tax years 2025 through to 2029. Okay, 2025 through to 2029. So when you go to prepare your tax returns, 2025 tax returns next year, then you'll see that there's a provision for you to benefit, for more than just the 10,000. You may not have, your situation may not give you the full 40, but it actually allows you to move from the 10,000 up to 40,000. And this is only going to be applicable for the tax years 2025 through to 2029. Okay. So as I was saying earlier on, in some states you have individuals who pay some significant property tax bills, but they were limited to only a 10,000 deduction. And so grumble. Now there's a lapse of the limit, and so people can now be benefiting from more than the 10,000 limit. So it's moving from 10 to 40,000. However, it's just for the period 2025 through to 2029. We don't know what will happen later on, but the bottom line is that in 2030, it should revert to the 10,000. Okay, it's moving from 10 to 40 over the period 2025 through to 2029. In 2030, it will be reversed. As of now, it is supposed to revert to 10,000 in 20. So you can then plan accordingly, because it means that you have a 4-year, so to speak, 25 to 29, a 4-year band to do whatever in the event that it really expire or revert rather to 10,000 come 2030. That is it for your state and local tax deduction. Moving on to our overtime and tips. I recall when the announcement was made that it was being considered to, as it were, give some relief on the tax, on the taxing of overtime and tips, because a lot of our workers who are in the hotel, in the food and beverage industry, in the hotel industry, quite a bit of the earnings come through tips, and yes, a lot of that overtime too. And so to give some level of relief, the overtime and tips deduction, that is, so to speak, relief from tax, has been expanded. Here again, for 2025 through to 2028. No, not like the SALT. The SALT was 2025 to 2029. But for the overtime and tip deduction, what the adjustment that I'm going to speak about applies to 2025 through to 2028. Now, what it's saying is that up to 12,000, and again, if you're a single filer, it is at up to 12,000 of your $12,500 of your overtime pay. Now, if you're filing joint, then of course that now doubles to 25,000. But the bottom line is that for the period 2025 to 2028, a single filer up to 12,500, joint filers up to 25,000 of your tip income for each year, during each year, can be excluded from your federal income tax. Okay, so that is a very, very good one. Yes, we're talking strictly about business taxes, and you will say, okay, but this really benefits the employee. True, yes, but because it is something that will be enacted through, you know, an employer controlled process, which is payroll, we thought it would be very important because it has implication also for the business, and but more so for the employee. Now, note, however, okay, employers must continue reporting the normal withholding on, you know, reporting on form W2. Okay, always still gonna be reporting, but the employee will subtract that amount when they go to file their tax returns. So it will be shown on the W2 because your W2 has to show your total earnings. But what we're saying is that when the taxpayer goes to do his or her tax returns, then that is when there'll be a subtraction of this qualifying amount. And that's that. Okay, so that's it for overtime and tips. Period is 2025 through 2028, unlike the state and local tax deductions, which is moving from 10,000 to 40,000 for the period 2025 through 2029, which is set to revert to the 10,000 come 2030. Cool. So that's it. We do a little double whammy today, but that's it for now. So we're moving right along, and I think we have to, is it 29? So we're gonna have two more, 30, 31st, and then it's all over. So I catch you down the road. Okay, we're moving nicely.